Hello there, Maverick Traders. This is Rob, and this is the Trading Room. We are now moving into monthly options expiration for October, so a lot of us are going to have lots of positions expiring this week, so let's get into what's going to happen this week. In this session, as always, we're going to take a look backwards. We're going to take it to last week, look at the news. That's really going to set us up for where we are today. At Maverick, we have a saying, trade the market in front of you, not the one you want, not when you think it should be. Just trade the one that is. So we're going to look at all the charts. We're going to give everything a technical score, not a score based off of my opinion, your opinion, literally just based on the charts. And we're going to take those scores and we're going to look for the best setups in some of the sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
This week was actually a positive week by the end of the week. However, it came off of a capitulation low, or just a really nasty bottom. And we bounced at the end of last week. And last week in the trading room, we said, hey, look, we're going to give this week a +1. We think it's probably going to be a mildly up week. And we drew the line at 43.35 on the S&P. We said, hey, 43.35 is the spot we think it's going to bounce to. We actually went past that amount on Thursday, and then we dropped back down below it on Friday. We'll take a look at the charts here in a second. As we said over the last couple of weeks, the bond market is moving the stock market. The bond market, when it was running up to 4.9%, caused some issues. When it back down to 4.5%, people got excited, and you can see it was kind of mixed by the end of the week. We saw a pretty big push this week into risk-off assets. We saw stuff like the Swiss franc, oil, gold, they all surged. Oil and gold were both up 5% for the week. The Swiss franc was up about 1.7% for the week. Let's talk about the news events last week because we had two events that really were big. First, we had the PPI on Wednesday. Look at those numbers. It came out hotter than expected. You would think that that would cause the market to go down. It didn't. The market did not go down on Wednesday. Wednesday was actually an up day. Then on Thursday, we got this CPI that was hotter than expected. You would think that would cause the market to go down. Well, guess what? It didn't at first. Take a look at this chart on Thursday's price action. As you can see, the first couple hours of the day, the market was holding on great, and then it just fell apart and had a nasty day on Thursday and a nasty day on Friday. So that leads us to the point is, where are we in the market? We had hotter than expected inflation numbers. The market tried to shrug it off, and by the end of the week, just couldn't do it and fell back down into that exact 43.35 area. Before we jump into the charts, let's take a look at last week's trades. All right, we had a trade on Google. We had a 135, 140 diagonal call spread. Diagonal call spreads, you guys know all about them. They are a +1 type of trade. So on this trade here, it closed at 138.58. So we're still at a profit. It's not a great profit. I actually rolled my diagonal towards next week. So I sold the October 20th 140 calls again against my longer dated long calls. I still think this looks good. Same thing. We went up, turned back down, had two nasty days. Everything still looks good here. We just made a new high from the last couple months on Google. So I like this one going forward. Over here, we also had a diagonal call spread on XPO. We had a 80. We've got a 75-80. So we're playing at 75 to 80. And this one is November monthlies and October monthlies. You can see this one did not hold up as well as Google did. And we're now down, and we're down on the trade. So remember, diagonal call spreads. We've got a risk graph that looks like this. 80 was the profit point. This was probably 77. So we're down here. We're down here in this area. Everything technically is still holding up. So I'm still in this trade. Technically, we haven't broken down below these. If we break down below these moving averages, I am out. I'm going to run for the hills and just take that capital and put it elsewhere. But if we do recover, this trade still has a week left to go. So still looks okay. It's slightly down. So Google slightly up. This one's slightly down. We had a sideways trade on Coinbase, and we had the middle of our butterfly at 81, and we had 76. To 86. So this was our butterfly. We needed to close somewhere in this area. And you can see Tuesday, we looked pretty smart. Wednesday, we still looked okay. Thursday, Friday, completely demolished this trade. This trade ended up being a max loss on Coinbase. We had a 1 week trade also on Dollar General. Same thing. We had a 102, 105. So on Thursday, we were looking like absolute geniuses. Well, I shouldn't say geniuses. This wasn't a really aggressive trade in any sense of the word. We're looking for a 102, 104 bear call spread. News came out that they brought back their old CEO. Again, it doesn't matter. Who cares? We jumped up substantially higher here. This trade ended up being a max loss just based on 1 day. Now, I tell traders all the time, when this kind of stuff happens to you, when you have a trade that looks positive the whole time you're in it, and then the last day of options expiration, there's some outsized move, I need you to remember that there are going to be times when you get that outsized move for you. And whenever it happens for traders, I always reach out to them and said, hey, I need you to remember this time because this trade looked terrible until Thursday. And then all of a sudden it came in for you for a max gain. I need you to remember this moment. So when you have a moment where it does the opposite, where everything looks good until Friday, I need you to understand that it all evens out. You're not, quote, unlucky. This is literally just trading here. This is going to happen sometimes. We had a trade that looked wonderful. News came out on Friday. It jumped up. What we do as traders is we have selective memories. Anything that goes our way, we file that in our brains as we're smart. We did it. We called it correctly. Even if we got lucky, we still file it in, we're good, that was all skill. When it goes bad, when it goes against us, then all of a sudden we file that as unlucky because we don't want to admit that we did it wrong, that we messed up. Look, it's just a losing trade. It's not a mess up. This is going to happen. I just need you to remember the times when it does go for you so you don't have some psychological mistakes from it. Let's jump into the market. Let's see what happened last week, and then we'll put last week to bed. Dow was up 0.6, S&P up about 0.5%. So you can see the Qs were up not quite as much. The Russell just cannot catch a break. The Russell is actually down for the year. All the other markets are up for the year, and the Russell is just really hurting. And I already talked about the move we saw in gold and oil. Big moves as, again, there's tensions over in the Middle East that's helping oil prices go higher. The flight to safety is also helping the gold market go higher. I want to spend a lot of time on this chart because where we are is very, very important. First of all, I want to talk about what I've been talking about for the last, 2 months. And then luckily, this is the last week I will be talking about this because it's over. The seasonality pattern of September 1st to October 15th, statistically being the worst 6 months of the year historically in the stock market. Every single year, we tell our traders, hey, look, we don't know what's going to happen, but we do know that a lot of years we see really negative returns in this 6-week period. The six weeks after this period is typically an up move. It doesn't happen every year, but it's typically an up move. So I need to start off with the backdrop of we kind of expected September 1st to October 15th to be negative. If you go back to last year, and I'll throw up a chart here, you can see that on October 15th, it looked really terrible as well. And you can see the market actually recovered and had a nice fourth quarter off of that move. We have no idea what's going to happen this year. But as you can see here, this chart doesn't look great. The last 2 days have taken us now back underneath support. But I do want to point out the long lower shadows here. There are buyers coming back in, but we did close under this 43.35 that we identified, but not so much that it causes me to say, okay, that support has been broken. If we get another candle next week, it's going to be confirmation that this was a bear rally. That's all it was a bear rally, and we are highly likely to make a new low. I've been talking over the last 2 weeks how I've been taking profits on my bears when they roll off on expiration, and I'm going to a more neutral stance. So right now, I am neutral in the market. If we drop on Monday and Tuesday, I'm going to need to get more bearish. Like I said, I'm neutral here. My delta is neutral. I'm like at a zero. If we do turn down, I need to get more bearish. If we hold these areas, that again is going to be really good for my outlook. If we actually move up, then I'm going to have to do the same thing on the opposite side and start to get more bullish. We are moving into earnings season. Earnings season started. On Friday, we had bank earnings that were really good earnings, but then the stocks sold off. We'll have to see what happens with earnings, but typically, if you take a look at the last couple of earnings seasons, it's been a good period in the stock market. So we've got the seasonality patterns ending, we got earnings starting. We've got a lot of things that are telling me we're not going to fall apart like we did in like 2018. 2018, we had a 20% drop in the fourth quarter. Look, that might happen again. Everything is telling me it's not likely going to happen. I've been wrong, so don't take that as anything other than my opinion. And again, you'll see that in a week I'll change my opinion again. We have a saying at Maverick, trade the market in front of you. Not the market you want it to be, not the market you think it should be. Trade the market in front of you. Here are the cues. You can see the cues look much, much better. We broke out above. We held these support lines. We broke out above the moving averages. Yeah, we had to pull back Thursday or Friday. But look, this is all off of just a massive rally here over the last 5 days. We haven't even given back 50% of that yet. The markets right here, I think you flip a coin. I have no idea what's going to happen this week. You know me. Every week I show up, I say this is what I think is going to happen. I don't have a good call this week. Here's the bond market. And this is another reason why I think I don't have any idea this week. You can see we ran up at 490. It was obviously a problem. We backed down to 450 and everyone was happy. We got one bounce on Thursday and then the market gave up the gains. Friday's candle is just a confusing candle. Are we going to bounce back up to 480 or are we going to settle back down into 450? I don't know. I literally don't know here. You know me. I show up, I give you my opinion. If I'm wrong, I say I'm wrong. This week, I think I could flip a coin and be about as accurate as my opinion would be. With that being said, let's talk about this week. So here we are. We are either in a bear rally about to fall apart into a new low, or that was the low based on the seasonality periods, and we're going to start now going sideways or grinding higher. I think by the end of this week, we will have a better understanding of where it is. I'm not looking to put on a lot of new trades here. I'm looking to wait and see what happens. But that being said, bearish. We are bearish until proven wrong. The charts still say be bearish. As I mentioned, earnings season starts. Start checking for earnings reports on any of your trades. You can trade through earnings, just trade the right way through earnings. We want to make sure we have very controlled risk through earnings. And the dollar and the bonds are still the key to this market. If this bond market backs off, we will see a stock market rally, no question in my mind. There is a ton of Fed speak this week. I'm going to go ahead and circle all of the Fed speak this week. You can see that that's a lot of Fed speak. Report of note is retail sales, and I don't think that's going to matter all that much. It's been hot, it's been cold, the market hasn't really moved off of it. Lots of Fed speak this week. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. So when we just look at the technicals, where are we? Well, we are at our 20 MA. So that is a 0. We are below our 50 MA. That's a -1. And the slope of these is still moving down. You can see they might be flattening out. We don't know yet. But at this point, it's a -2. I don't care about how you feel. You should not care how I feel. Like I said, I'm saying publicly, I think the market holds this week. If I'm wrong, I will throw that away in a second because I will go with what the charts say. At this point, you should still be leaning to the bearish side, but you should be open and understanding that it might change. But at this point, we're in a -2. You have to be bearish. Let's see what happened in the sectors and any changes that happened this week. We take a look at the performance. Right off the bat, we have a couple sectors that just jump at us. Energy flew. 4.5%, really nice week in energy. Energy went from a 0 to a -2, back to a 0 this week. Been a crazy move in energy. Utilities. Utilities and real estate. These are the two sectors that are hardest hit by rising interest rates. We backed off from 4.9 to 4.5 last week. So, of course, we see these move higher as well. Those two sectors, whatever happens to interest rates, will greatly affect those two sectors. And then you can see everything else really didn't do anything except for consumer. Consumer is the clear standout of where there is weakness. Consumer cyclical has lots of weakness here. So let's go through these one by one. Utilities, it's going to stay at a +3. Yes, it had a great bounce. It had a great bounce, but we'll take a look at all the other sectors. We had lots of sectors that bounced above the 20, bounced above the 50. We didn't. We still are below it. I don't think we're going to go back down to new lows unless, again, interest rates really shoot up. But I think you still have to give utilities a -3. Communication services. At one point on Wednesday, we had just pierced this last high. And at this point, this looks like a clear +2. By the end of the week, we got some profit taking, long lower shadow right at that support. We're going to give this a +1. It was a +1 last week. So look, for the most part, it had a bullish price action. Real estate, we're going to upgrade this to a -2. It wasn't -3, but it pierced up above the 20. Remember, the utilities did not pierce above it, which is why we left it at a -3. We do have to upgrade real estate to just not terrible. It's horrific. Actually, I don't know if horrific or terrible is worse, but again, you get the point. -2 is a little bit better than -3. Industrials, same thing here. I want everyone to take a look at how much they went above moving averages. We had utilities didn't even get to the moving average. Real estate got to the moving averages. Industrials at one point went above it. However, it did pull back. So maybe we give this a -2 plus, slightly stronger than real estate, but still a -2. Take a look at healthcare. Healthcare, we were at a -3 last week. It did improve. You see, it came up here, came back down, but on Friday, we actually had an up candle. But it's right at its moving average, so we're going to give it a -2. Financials, you can see that we did rally back up to our moving averages, and we're right there. We were a -3, we're now a -2. But when we take a look at other sectors that bounced above their 20, this actually doesn't look quite as good. So maybe a -2 . Here we have consumer discretionary, and this is the most anemic bounce we saw. We only saw 2 up days and then 3 failed days, and we're now really back to our lows almost. This is substantially weaker than anything else. We got to give this a -3. It wasn't -2 last week. We got to go to -3. Here are our technology. As you can see here, the sectors are telling you where the money is actually coming in. We went above the 20, above the 50. And on Thursday, when the market fell apart, the NASDAQ was up. Yes, Friday was an ugly day. I can't deny that. We're now back in between the moving averages. This is a +1. We're above the 20. These moving averages flattened out. You can see a totally different story here in technology along with communication services. But then we come over to materials, and it looks just like we saw in the consumer sector. This is just nasty. It doesn't look great. It doesn't look great. We're almost back to our lows. I've got the material sector at a -3. And then let's take a look at our crazy uncle of energy. One day looking really good, next week looking really terrible, and then now coming back to we don't know where you are at the moment. But look, it's a zero. It's a zero at this point. The fact that though it has recovered much more than the rest of the market tells you that there is some underlying support there, but we still need to rank this as a solid 0. Here's where we were last week. The upgrades this week: technology bumped up, energy bumped up. So it's clear that energy, tech, and comm services, this is where the money is going. We saw a whole bunch of +3s get improvement. Industrials, healthcare, real estate improved, but consumer backed off, materials backed off as well. So we want to take a look at where the market is the worst. Is materials, consumer, utilities. That's where it's the worst. Yes, industrials, financials, real estate, healthcare, they're not great. This is where you want to be looking for some longs. So with that being said, let's go and take a look at some possible trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
First off, in industrials, we've got General Electric. So General Electric here, and I was looking through the sectors. I wanted to find the stuff that really started to crack lately, and GE has been outperforming the market for a while. And you can see we're now breaking down. We rallied back up. We failed at these moving averages. I'm looking at a 106, 110 bear call spread, and I'm looking for 2 weeks out. I'm not asking for a bunch. 106 is right here. So 106 down to 110. I think there's some possibility that the industrial sector and GE could continue to weaken. Again, 106 is the lower end of that spread. The consumer sector was also very weak. This is where we want to be looking for weakness. Here's Etsy. Take a look at Etsy. The bounce it had was anemic compared to the rest of the market. The rest of the market bounced back pretty substantially. This one didn't. Barely went up to the top of its range, hit its range. Look, I like this one quite a bit. If this market does break down, to me, this one is heading to below 60. Depends on how you want to play it. If you want to be very quick, just a 1 week trade, 62.64. The stock right now is at 63.36. So if you do a 62.64, I mean, that is about the wimpiest trade you could possibly make on a stock. If you want to go further out, I'm going at 60.64. I'm going down here saying, hey, I do think we break down below the low of this base. But again, I need to give it more than a week. I'm going to give it 2 weeks to get to that point. We've had 2 shorts here. Technology was one of the sectors that said, hey, go ahead and be long this sector. Here is Western Digital. This one is not taking off. This is not soaring. This is not super strong. But what it is it's creeping higher. Creeping higher in a sector that just got bumped up from a 0 to +1 in a market that potentially could be at the end of its negative seasonality. Yeah, I want to start looking at this sector as some longs, but how do I sit through? Maybe I'm wrong. Maybe there's a week or 2 more downside to this market before we finally bottom out. How do I play that? Well, this is where we love the diagonal call spread. The diagonal call spread, 43.46, and we're just saying, hey, look, we don't know where this thing is going. There is clear resistance up at this 46.50 area, but we have a nice ascending triangle pattern here. This is where, again, I'm doing a 43.46 diagonal call spread for 1 week. 1 week. If it blows out and runs higher, guess what? I'll probably make 10, 15% at most. It'll still be a profitable trade on a diagonal call spread. It's just not as good as if you were in some other strategy. If the market, if WDC hangs out in here, I'm perfectly fine with that. I'm perfectly fine being in this area of a trade. It's when it finally breaks down below, I need to have some position management put in. This looks good. I'm not saying this is a great trade right here, right now, but again, a diagonal call spread is I'm willing to put on a trade and wait for this to develop. At the end of Friday, I get to decide what I want to do. Do I want to close the whole thing out? Do I want to roll it to the next month? Or do I want to hold on to the long calls? This looks like it wants to hold up. And if the market does bottom, I think tech and comm services are poised to be the best performing stocks. And then right behind that, I think energy is going to be one of the better stocks. I don't want to get too far out over my skis here on energy. Energy went from a 0 to a -2 to a 0. So I'm looking to be like barely bullish here. I'm looking at Chevron, sideways to bullish, so looking for a butterfly. And I'm looking at this 167.50. So 167.50 right here is going to be that middle of the target. And I'm going to play a butterfly that's going to basically be in this area. This is going to be my profit area somewhere in here. This stock does have to move up a little bit. And if I can get it as close to 167.50, that's going to be the best case scenario for me. So I'm looking to play this sideways, but slightly bullish, and I'm going out 2 weeks on this. I don't think Chevron breaks to new highs, but I also think it holds up and probably goes a little bit higher here over the next 2 weeks. That is it for trades this week. If you have trades you want to share, go to the Maverick Trading website, log in as a member, go into our forum, and we love to see all the chatter going about with our traders, everyone helping each other make some profits. Time to wrap this up. My opinion is we're going to hold these levels and move higher. Guess what? That's just an opinion. I can't react to that yet. In fact, you should still be bearish. I'm neutral, but I'm ready to get back on the bear side if I'm proven to be wrong. I want to just keep talking about what I've been talking about the last 2 months. September 1st, October 15th, typically terrible. If you go back to last year, October 15th, the market also looked terrible, just like it looks terrible this time. I don't want anyone to get too far short out over your skis, fully knowing that this seasonality pattern exists. If in 2 weeks we're still falling, guess what? Get more aggressive. I love that. But just be cautious, being heavily weighted to the short side at this moment. I would love to see everyone pull back to a -1, a 0, a -2, to where you're still leaning bearish a little bit until we get some confirmation. That's going to be the best place to be. As always, focus on the sectors. They're going to tell you everything about where the underlying stocks are going. Everyone have a great weekend this weekend. Remember, this is monthly options expiration, so a lot of you are going to have a lot of options positions expiring, so please manage them appropriately. Have a good weekend, everyone. Goodbye.